Okay, let's continue our second hour. So we want to talk about our risk, okay? So before we go to there, our first issue from your chapter 5, remember, review your chapter 5 because that's how you could prepare your chapter 8, okay? So remember, chapter 5, what we talk about, sales revenue, right? Sell the product, earn the revenues, and don't forget, sales discount, sales return allowances will make your revenue decrease, right? Because when customer pay the money back as soon as possible, they can get some cash discount. Why your company offer customers cash discount? Why? Sam, the risk, right? You're afraid the risk. What's the risk? They won't pay you money back. So you just wait there? No, you just wait there. You're afraid they won't pay you money back. So you try to give them some incentive, right? So try to reduce the risk. So you give your customer some incentives. If they pay the money back within 10 days, within 15 days, then they can get a cash discount, right? So it's about the risk we talk about. Also, sales return allowances is what? Customer return the inventory back to you, right? So they also will make your revenue decrease. Remember that from your chapter 5, okay? So after hold the process on your slide, page 19, remember, so when we prepare our financial statement, which one about our revenues is statement of comprehensive income, 综合损益表. Statement of comprehensive income tell you the revenue and expenses. After that, what's the profit we got, right? Okay. So at the beginning, we have a sales revenue. You sell the product to customers. But don't forget, 2 reasons will make your revenue decrease, right? First reason, sales return allowances. Second reason, sales discount, right? So after that, what is the true revenue we earned? Net sales. So usually net, when we talk about the net, it's our real amount. So also the same in chapter 8, when we talk about net for our accounts receivable. Why we talk about the net? Because the net amount is the real amount actually we can get from our customers, okay? So after the real revenue, then don't forget, nothing for free, right? So the first expense is what? Cost of goods sold. So it's inventory, about the inventory, right? So for inventory, we have the first expense, cost of goods sold. So after that, we got gross profit. So what does it mean, gross profit? The profit we can get only from inventory. We haven't considered other situations yet. Only inventory itself. What's the profit they could bring to us, right? Like what? I buy the inventory $10 and sell it $30. So only about $10 I paid. $30 I earn the revenue. So the between $20 is the gross profit, right? So the profit inventory could bring to your company. Okay? Remember that? So that's from your chapter 5. So that's why you have to go back to chapter 5. Okay? So let's talk about our second issue, also the most important issue in this chapter. So about how much money, what's the number we should put on our financial statement. Okay? So it's value 评价. So on your slide, page 23. Slide page 23. Remember, receivables. Which financial statement we could find out our receivables? Assets, right? So it's on our statement of financial positions. Balance sheet, right? Talk about our assets. Current or non-current. Accounts receivable is our oral promise. Oral promise, we could only accept customer pay the money back within short term. 1 or 2 months, right? So we put it on current asset, this part, okay? So since you understand, we put it on statement of financial position, 资产负债表, current asset this section. Then the next question we want to ask is what? The number. What's the number we should put on here, okay? So the number we should put right here, how much? Accounts receivable 100. Will we put it 100? Impossible, right? So the number we put on financial statement is after we consider the risk, right? So after we consider the risk, the term we call it net reliable value, NRV, 净变现价值, okay? So this is the net amount we have after consider the risk. So NRV, net reliable value, 净变现价值. Okay? So what is our NRV? Net amount we expect to receive in cash, okay? So net amount we expect to get means what? After consider the risk, you know, $100 after we consider the company's financial situation, after we consider the company's credit situation, I think, okay, $100, I expect they have the ability maybe only pay $80 back. So I will put $80 on financial statement, okay? So NRV is after we consider the risk, then how much money we expect we can get in the future. Okay, so after we consider the risk, how much money we expect to get in the future, we call it NRV, 净变现价值, net reliable value. Okay. So, for example, right here, for this case, accounts receivable $100 at the beginning, but after the whole period, you find out customer didn't pay the money back. So on the last day, we find out customer still owes us money, $100, right? So we are going to prepare financial statement. Which one? Statement of financial position. Which section? Current asset. Then we tell them we have accounts receivable. How much? 100? Of course not 100. Why is that? Don't forget. Based on that 100, I have to consider, hey, Jason, how much you are going to pay me back? Do you have a job? No? Sorry. Just kidding. Oh, do you have a car? Sorry, wrong example. Okay, don't. So every time I consider the whole situation, do you have a house? Do you have a car? You don't have? Do you have a job? You don't have? After I consider that, I find out, the risk is too high. $100. Okay, maybe he could only pay me back $20. So I don't expect he could pay the all money back. Okay. So after I consider the risk and find out, okay, based on the $100 he owed me, then I think the risk how much? $80. Okay, because I don't expect he will pay me $100 back. How much money I expect he will pay me back? Only $20. Okay, so only $20 I expect he will pay me back in the future. Okay, so based on this, could you tell me the risk how much I expect? 80, right? Okay, so you should understand we talk about the risk. So what's the risk? The amount of money they won't pay you back. Okay, so the risk is $80. So this is the risk. Then $100 is our accounts receivable, right? How about the $20? We expect he will pay me back in the future, right? Which term we use? $20, what we call NRV. Okay, so NRV, net reliable value, 净变现价值 $20. So this is our NRV, 净变现价值. Okay, so based on this, how much money we will put right here? 20. Okay, so we will say, okay, accounts receivable, we expect only $20. Expect to get back in the future. Okay? No problem? Okay. So for the $80, we expect maybe we cannot get back in the future. So there's an uncollectible accounts receivable. Okay, so we think about this part, uncollectible. So we think about this part, our risk, 无法收回的部分。Okay, then why maybe customer cannot pay back the $80? So many reasons, because they don't have the ability to pay the money back, right? Maybe because they have some financial crisis, or maybe this year or for the past few years they don't have a good business, so they cannot make any profits for the past few years. Okay, so usually we will look at each company's situation. So we will look at each company's financial statements, to look at their financial situations, to see whether they made any profits for the past few years, to look whether they have assets or they have too much liabilities, so on and so on. So based on any kind of situations, always we have this kind of risk. Okay, so for this risk on collectibles, also we call it credit loss, 信用损失. So when we talk about credit loss, means the amount we cannot get back. Okay, so credit loss means the amount we cannot get back. Okay, so it's the risk we talk about it. So when someone owe you money and they cannot get back, so always we have this risk, credit loss. So did you find out why it's normal and necessary? Because it's normal and necessary. That's why accounting, we have to discuss this issue. If it's not normal, then we won't discuss it now, okay? Because it is normal and necessary. That's why we have to think about it and how to describe the situation. So why is normal? Why is necessary? Normal means all happen often, quite a lot. It's quite common. So do you think someone won't pay you money is normal situation? When you lend the money to 100%, you think, just me, right? You think 100%, let you guess. If you have, maybe you have 10 friends. You lend the money to 10 friends. Let you guess how many percentage you will get the money back. Maybe 10 percentage. 50%. Okay. Jason, how many percentage you think? You don't have a friends. You don't have a money. Sorry. Arnold, how many percentage? 80%. Okay. Zoe, how many percentage you think? 80. So no matter it's 50 or 80, anyone say 100%? No. So what does it mean? It happened. The difference is how many percentage. Okay? So that's why this normal. Normal means what? Always you could find out someone won't pay you money back. So it's a common situation. Since it's common situation, not abnormal, not a normal. So that's why accounting, we have to consider it because it's normal, okay? And why is necessary? Why is necessary? It's necessary risk means what? Company have to take the risk, okay? So normal means it happened. It's quite common. It happened often. Necessary means company have to take the risk. Okay, why is necessary? I don't want to take the risk, but I have to. Why? Yeah, because you will lose your customer, right? Remember, customers say, I want oral promise. Could you say no? You cannot. In order to sell the products to customers, okay? So in order to sell the products, to earn the revenues to customers, then you have to take the risk to accept the customer's conditions. Okay, so that's why it's necessary. Okay. Okay, so because it is normal and a necessary risk, that's why we have chapter 8 to discuss the issue, even though it happened or not yet. Could you tell me the risk happened or not yet? For example, let's come back here. Customer owe you money $100. Base day $100. I think the risk is 80. So I think I can get $20 back. Could you tell me the risk happened or not yet? Not yet. Because on the last day, we consider the company, another company's whole situations. Then we expect, I think maybe 80 cannot get back. Maybe in the future, I just only get back 20. So did you happen yet? Not yet. Okay. So even though the risk didn't happen yet, but we still have to consider it. Why? Because it's normal and necessary. So we want to tell this kind of risk to financial statement users in advance, okay, to let them expect what's gonna happen in the future, okay. So the risk haven't happened yet, okay, so not happened yet. Okay. Any questions? Okay. So for the risk, since you understand the concept, so accounting, how we describe the risk on financial statements, okay? So we talk about accounting way, how to show you the whole concepts. So accounting for the risk, credit loss, 信用损失, the risk, the accounts we use is bad debt expense, 坏账费用, 呆账费用. So the account we have is bad debt expense. To tell you the risk, credit loss. So that's our risk. We use this account to tell you is our risk. Bad debt expense, 坏账费用, 呆账费用, okay? Why is 坏账费用, 呆账费用? I teach you one Chinese. 坏账费用, 呆账费用. Why? Because you lend the money to someone else, right? You are 呆呆. He didn't pay you money back. He are 坏坏. 你呆呆，他坏坏。Do you understand 呆呆? Silly, stupid. 坏坏. They are bad. So you are silly, you're stupid. To lend the money to them, they are bad. Won't give you the money back. So 你呆呆，他坏坏。Okay, so that's bad debt expense. We use this account to describe the risk. Okay. So we put it into which financial statement? Bad debt expense. Expense. Remember, statement of comprehensive income. So for statement of comprehensive income, remember, we tell you the revenue and expenses, right? So did you find out net sales? What does it mean? Net sales is the true real revenue we earn, right? So we have the net sales. So net sales is our real revenue you earned from customers. But don't forget, nothing for free, right? In order to earn your revenues from customers, we have two kind of expenses, right? So what's the first one? Cost of goods sold, right? So our first expense is cost of goods sold. So cost of goods sold, this is your first expense. What's our second expense? Operating expenses, right? So in order to sell the products to customers, we have some different kind of expenses incurred, happened. So second expense is operating expenses. Okay? So what's our operating expenses? In order to sell the products to customers, you have to ask employees do something for your company, right? Like what? maybe produce the product, maybe deliver the product to customers, maybe do some paperwork, so on and so on. So you have to pay the salaries to your employees. And utility expenses, 水电费用, what's that? You have to use the water, electricity, right? So I have this kind of expenses incurred in order to do the business. Rent expenses, 租金费用, what's that? Maybe you don't have a building's house, right? So you have to rent an office, right? So you have to pay the rent expenses. But no matter which one, why this kind of expenses incurred happened? Because you want to do the business, sell the products to earn the revenues from customers, right? What else? Bad debt expense. Why bad debt expense happen? In order to earn the revenues from customers, you have to accept customers' requirements, right? So what is customers' requirement? On account, on credit, oral promise. You cannot get the cash today, right? So you should understand, even though you earn the revenues, $100, but we don't guarantee you can get the $100 back. So why? Because bad debt expense, the risk. Okay? So bad debt expense is what? Is the risk your company have to take. You have to take in order to earn the revenues from customers. Okay? So still, in order to earn the revenues, we have a different kind of situations happened. So don't forget, bad debt expense, 坏账费用, also is part of our operating expenses. In order to do the operating activities, in order to sell the product to customers, we have different kind of situation incurred happened. Okay? So for their revenues, after we consider different expenses, so finally, income from operation, what does it mean? It's the real profit you can get from customers. Okay? So don't forget, nothing for free. You have to consider different kind of expenses. So real profit from customers. Okay? Any questions? If you don't have a question, could you tell me bad debt expense $10? That $10 is the risk, right? So $10 is the true amount or estimated amount. That $10 is true or not? It's not, right? Why? Remember, here we tell you, we expect on the last day, based on the risk, we expect maybe cannot get back. Okay, so not happen yet. So the $80 or right here, the $10 is not true. It's only your expectation. Okay, so the $10 is your risk. Also is estimate, not the true amount. 估计的。Okay? Any questions? No problem? So the whole concept, we've done the whole concept already. Okay? So based on the whole concept, right now, we want to tell you accounting methods, how to get the final result like this. So we show you the final result like this. So how to do it in accounting way? What's the process we have? Okay? So we have two methods on your page 29. First method, the real life method, 直接冲销法。Second method, allowance method, 背抵法。So the real life method, 直接冲销法。Allowance method, 背抵法。We have two methods to tell you how to record the risk in accounting way. Okay? So what's the difference for these two methods? Depends on your personality. So remember, for perpetual 永续盘存制 periodic 定期盘存制 what's the difference? You are a hard worker or you are a lazy guy, right? Here, what's the difference? Depends on when you look at this picture, what do you think? Jason, what do you think? When you have a water right here, only have. So what do you think? Have the cup? So what do you think? You think, oh, we still have a half full. Or you think, oh, it's half empty. Which one? After accounting, we will figure out you totally. Everyone know who you are. You don't have the money and you are empty. So when you think, you have the glass only half empty, means you think the water is going to gone, right? Then you are pessimistic or you are optimistic? Pessimistic. Okay, so we know you don't have money and you are pessimistic. So depends on you are optimistic or you are pessimistic. 乐观或悲观的。If you are optimistic, 乐观的, then you will use the real life method. Means what? Living in the moment. Oh, don't worry too much. It haven't happened yet. Then I don't think about it when it happened. I will just think about it. So you just live in this moment. Don't think about the future. Okay? So you are optimistic. If you are pessimistic, you will think what? Oh, you worry too much. Even though it haven't happened yet, you still will worry. What if it happened in the future tomorrow? Then what should we do? So there's a different. If you are optimistic, you will use the real life method, 直接冲销法. If you are pessimistic, you worry too much, even though it haven't happened yet, you will use allowance method. Okay? So the real life method means what? The risk happened yet? Not yet. So why we worry about it? Don't think about it. Okay? So the real life method, when you are going to worry about it? When it happened. Okay? So on your slide, page 31, the real life method, we are optimistic, 乐观的. So we don't worry about the risk until it happened yet. So when you are going to record the risk when it happened. Okay? So when it happened, when you find out someone really really run away, disappear, won't pay you money. Okay, so here tell you when we record the risk. Determined means what? When it actually happened. Okay, so when it actually happened at that moment, we will describe the risk. Okay, so when anytime when you are sure you really cannot get the money. Did you find out? So optimistic 乐观的 the red life method, when you will record the risk, when actually happened, you are sure. So someone really didn't pay you money back. Okay, so only at that moment we will recall the situation. So bad debt expense, the risk when we use it, when we recall it, actual loss, when it actually happened. Okay. So we recall the risk only when it happened. So before it happened, what you think about the risk? No, don't think too much. I just want to live the moment. How's the today? I don't worry about the future. Who knows what happened tomorrow? Don't worry about that. Okay? Okay, no problem. So based on this concept, could you tell me when I'm going to prepare financial statement, here, accounts receivable $100. Oh, I thought you want to save the VIP to get the fresh air. So accounts receivable $100. If you are optimistic, 乐观的, we use the red life method. So based on this, when you look at a financial statement, what's the number we have? 100, right? Because do we need to worry the risk? We don't need to. Because what? We are optimistic. Don't worry about the things, the risk not happen yet. Okay, so don't worry too much. So we don't think about it. So did you find out? You will put $100 because we don't worry the risk. Okay, so we don't think about the risk until it happened. Okay, so when you will consider recall the risk when it happened. So in the future, when it happened, you just record the risk. Okay, so in the future, when it really happened, so if we told you, oh, in the future, when I ask the customer, I find out the customer disappeared. So I really cannot get the $10 back only. I just get $90 back. Okay, so actual loss $10. So in the future, when it actually happen, we will record it, right? So birthday expense, how much? $10. Could you tell me this $10 is true number or not? It's true number, okay? So birthday expense, the risk happened already. So it's true number $10, okay? So birthday expense, the risk happened. That's why $10 is actual, is true. Any questions? You just understand the concept is okay. Why? Because right now, accounting, we don't accept you use this method. Long time ago, we accept you use this method. But right now, you cannot. Okay? Why? Because when you look at this $100, you cannot provide more information to users. Accounting, what's our purpose of accounting? Provide information to users. Only this, you cannot provide more information, okay? So you will let users misunderstanding thought, oh, I have a $100, but it's not true. Why? Because the risk is normal, right? So based on $100, normal case, usually you cannot expect you will get $100 back. Impossible. Okay? So based on this, you will misunderstand, mislead the users. Make them misunderstanding thought, oh, they are rich. Actually, it's not. Okay? So that's why for the concept, let you understand. But right now, accounting, we don't use this one. We will use another one per okay? So another one is what? So that's why here, how to record it. Journal entry, you don't need to understand it. It's okay. You just understand the concept. So another one is allowance method when you are pessimistic. Okay? So even though the risk not happen yet, but we want to tell users the risk, provide the more information in advance. So we will think about it right now, even though it haven't happened yet. Okay? So did you find out? Is estimate. We think, we worry, oh, maybe it will happen in the future. So it's not true. It's only our estimate, expectation. Okay? So when? At the end of each period. Why? Because when we are going to prepare financial statements, we want to tell users what happened. Okay, so that's why on the last day of each period, we consider the risk because we want to provide the related information to users. Okay, so when we have to record the risk, at the end of each period, before we prepare financial statements, then we have to consider the risk. Okay? So the risk is true or not? Of course, it's not true, right? So it's our estimated loss because it is not happened yet. But we want to tell users the information. So birthday expense, the risk is what? Estimated. Okay? So based on allowance method, we record the risk when? At the end of each period. So you record the risk the end of each period. And happen yet? Not yet. Okay? So the risk is not happen yet. Okay, it's not happened yet, but we worry too much. We want to think about it right now. Just me. Did you bring umbrella right now? Umbrella? No? Anyone bring umbrella? Elaine? You? Oh, so you are pessimistic, right? It's not raining yet, but you are worried. Oh, maybe it will rain, so you prepare your umbrella right now. Okay? So happen yet? Not yet, but have you considered the risk? Yes, right now. Okay? So the same. Okay, any questions? So based on this concept, which number we put on our financial statement right here? Accounts receivable $100. How much we put? Not 100, right? So which number we are going to put on financial statement? If I estimate after consider the whole situations, I think right now I will consider the risk. Based on the $100, but this company's financial situation, this company's credit conditions, after I look at the whole situations, I think maybe the risk is $5. Okay, so right now on last day, you will consider the risk. Okay, even though it haven't happened yet. So in this case, for example, I think I estimate the risk is $5. Okay, so I consider the risk is $5. So that $5 is true number? It's not. Okay, because it haven't happened yet. But we worry too much. We want to consider the risk right now. Okay, so $5 is our estimated amount. It's not true. Okay, so after we consider the risk, could you tell me what's the number we put on financial statement? 95. Okay, so I'm going to put $95 on our financial statements. So this number will be 95. Okay, so 95 is what? Your NRV. Okay, so how to get your NRV? Based on the number, the amount they owe you, right? So accounts receivable $100. I think the risk may be $5. So I expect to get the money back is $95. Okay, so $95 is what? The amount we expect to get back in the future. Okay, any questions? So that's the concept we have. If you don't have any questions, let's take a break.